David, before we get to next week, I wonder what you make of, I guess relatively sluggish action this week. Is this just the tape trying to absorb the rally we've had this year?
I mean, it's been a pretty incredible rally. We're up 6% in the first 3 and change weeks of the year. We've actually taken all the losses from last year, and now we've netted those off, and we're positive from the beginning of 2018. I think, the bear narrative is sort of morphing a little here, Carl, and I wonder how it's all going to evolve. We're now talking much more about slowdowns, not about inflation. The Fed rate hikes that everybody thought were going to come and sort of lower multiples, that's not really the story anymore. So it seems like the bears have kind of done a little switcheroo, and they want to talk China, they want to talk Germany, they want to talk slowdown, as opposed to last year where we were talking about inflation, Fed raising rates, and kind of everybody getting scared about those higher interest rates affecting multiples and growth being too hot. And I think as well, one of the things we talked about last year, everybody was running around talking about global coordinated tightening. The ECB was going to be paring back balance sheet, maybe even Japan. So now it's a very different storyline. I think the bears got to get their act together, and we'll see if they can do that over the course of the next few months. My guess is no, that storyline is going to be difficult to tell.
And Brian, speaking of the Fed meeting next week, you have this report in the Wall Street Journal today that Fed officials could be weighing earlier than expected end to the bond portfolio runoff. How likely do you think that is, and what does that mean for the market and all the volatility we've seen?
Well, yeah, I think that's certainly behind some of the rally today. The market seems to love the newly dovish Fed, or at least not as hawkish as was first billed in December. If they're talking about it and they're perhaps leaking things into the press, there's a chance that they might announce something next week. Jay Powell, this will be his first January press conference. I wonder if he regrets the decision to do a press conference at every meeting, given how much is on his plate and how little economic data he has to work with, given that the Commerce Department is not publishing anything. But if he does decide to come out and express at least a sentiment that they're considering ending the wind down of the balance sheet, that again, along with the taking the rate hike off the table, the third rate hike off the table in the December meeting, will be a sign that the Fed is not looking to do as much tightening or as much normalization as it was just 6 months ago.
David, what do you think of the dollar this year, especially given all of the macro uncertainties in place? And based on that thesis, how should investors be putting their money to work on a global basis?
I'm still reasonably constructive of the dollar. The Fed's moved to this pause, which, I think the market begged them for, and they sort of understood what was going on with all the monetary policy tightening that's been put in the pipeline. But we still have a lot of tightening. We've got 250 basis points that we've done over the last 3 years. We've got QT of $500 billion. We've got possibly $600 billion more QT coming this year. Hopefully they wane that down a little bit. But as Milton Friedman said, monetary policy operates with long and variable lags, and I think that gushing pipeline of tightening is going to come into play in 2019. It's going to be a drag on global aggregate demand, but it's going to be supportive for the dollar because that's how tightening works. So I don't want to get too excited about a big dollar bear trade, even though some people want to do that, given that the Fed's pausing, maybe quitting QT, maybe even talking rate cuts by the end of the year. I think there's a lot of dollar demand out there, and a lot of guys borrowed a lot of dollars over the last 10 years. They got to figure out how to pay them back, and they're going to need those dollars, and it's not easy to get them.